Well, this is a hot topic. Got to tell you, it's the new thing in Canada Revenue Agency world. It's how can we do an audit, get more money with less work? That's called a net worth assessment. And when you get those love letters from the sky and it says that you're about to be audited and we want the following things, what you'll find is they ask for things that are frankly none of their damn business. But when you look at it and you say, you have to give them what is their business. So don't sign up for a net worth assessment voluntarily being led to slaughter, because that's what they want you to do. And it is their policy now to do net worth assessments as standard procedure. Why? Well, let's look at it this way. If you have good books and records or you don't have good books and records, in either case, it's a lot of work to do 100% audit. In the old days, they used to do spot checking. And if you were a pretty good dude and did a pretty good job and things were pretty okay, they would either go away or they would assess you with a small amount of tax liability. But in any case, the audit to ensure compliance, going through your books and records, makes absolute sense. And a net worth audit makes absolute sense in a judge's mind in the absence of good books and records. So if you have good books and records, I strongly advise don't make it easy for them to do a net worth assessment on you. Because what they're going to do, they're going to come into your house and they're going to tell you that they have the right to enter your place of business. And they do, unless, as accepted by the law, it's a dwelling house and you don't have to let them in. Because they're going to look around, see your television, your snowmobile, your ski craft, the kind of car you have, the color TV you have, your furnishings, and determine, wow, you've made some money somewhere, and they want their take on it. So how will they come up with that? To do a net worth assessment is really easy. They go through your bank accounts, all the deposits or income that they can't see or not. And I need to interject for a second and say I have seen a well done net worth assessment that I didn't take umbrage with, and it was in the absence of good books and records. So there is a time when it does make sense for CRA to do it. Where it doesn't make sense, as I was saying, they go through your bank account, credit card statements, and everything else. And by the way, they ask for everybody in the household's bank accounts. That's wrong. If they want to audit everybody in the household, they can send those little love letters to everybody in the household. Because you just simply go to the other person in the household and say, do you want your crap given to CRA? They would like to take a look at it to see if maybe there's some kind of a tax liability there. And if they say, no, mind your own business, then mind your own business and don't ask them for their crap. So I really find this net worth assessment highly offensive when they get into, okay, I want a list of all your assets. So let's talk about all these little assets that you have. Maybe it's a DVD player, maybe it's a television, maybe it's a snowmobile, maybe it's a mobile home, maybe it's this, maybe it's that, maybe it's stuff that you bought with your own damn money after tax dollars. So if they don't have the right to do a personal assessment on you in the absence, unless there's not good books and records and they have to figure out how you live this lifestyle on the amount of money that you filed on your tax return. So this is an extremely offensive initiative on the Department of Canada Revenue Agency as part of their TEBA, Tax Earned by Audit program, to get more money in less time. So you better get yourself a representative, and you better be thinking twice before you allow them in your dwelling house, and you better be thinking twice before you fill out that form that they give you that you're not obligated to. Let me make it clear. All Canadians need to pay the tax they legitimately owe, no more and no less. That doesn't mean they have to be subjected to an offensive, intrusive audit assessment to see if they can find some way of throwing a big tax bill at you in the absence of doing the damn job right in the first place. So you get the brown envelope, and the current ones are just full of nonsense that's unrelated. And by the way, in the media, there's a lot of talk about how dumb CRA letters are. And they're now rethinking, maybe making letters that they send out to us make some sense. For instance, in the net worth assessment part of it, they make a list of all the things they want you to give that are only applicable to a corporation. And if they don't know whether you're incorporated or not, they have a problem. You need to inform them. And don't be so willing to be led to slaughter when it comes to a net worth assessment. That's just what it is.